Hello, John Williams. Hello, James Rankin. So, John, you are the CMO of Instant Group, and you will introduce us to Instant Group. Let's make it short. You are one of the main players in the coworking and flex workspace industry internationally, also in Europe. You are based in London. And James, you are the head of research of Instance. So you are the one responsible for publishing all those great reports with a lot of data. I love the way you create your charts and because it's very, very intuitive and we understand a lot about the market. The purpose of the podcast is to discuss about some latest numbers you have raised and cooked, and also have a bigger perspective about the evolution of the office market, also based on the fact that companies are now figuring out that things are changing, and we will see what you have in mind for the moment and how you look at the forecast. But first of all, can you introduce us to Instant Group?
Sure. So we think we're in a pretty unique position in that we have the largest and the oldest set of global data on a flexible workspace. So we have a full view of around 33,000 centers globally now, but increasing all the time. And we've got that data going back over 20 years. So we have a pretty established view of supply, demand, and pricing on a global basis. And intra-region comparison is just really useful as we see the market growing at different stages around the world. But at the moment in particular, being able to look at the different regions in some detail as we see countries coming out of lockdown and how that's impacting the sector has been particularly useful. So one thing we've been doing over the last 3 months to keep ourselves busy is speaking to a lot of clients, both SMEs via the site, but also a lot of our senior corporate clients and heads of commercial real estate to really understand how they see the future of flex and they see the future of commercial real estate and offices actually.
So you are an intermediary between landlords, flexible operators, and also tenants.
And clients,
that's your main activity. You have a platform which lists a lot of flexible workspace and coworking space operators internationally. That's your main activity.
Exactly that. But we also we have found, built, and also managed about 2.5 million square feet of managed office space around the world too. So we have just done our latest deal in Chicago. We've closed 2 deals in Asia over lockdown and 4 in the UK. So we also have the position of being a provider of flex space as well.
Okay, and how many people work for Instant Group today to give an idea of the size of the company?
It's around 250 today.
Okay, perfect. So James, as we said, you are the head of research. So you have this, you have those sensors almost everywhere, and you had some fresh data that we could share regarding the impact of the COVID on the crisis. But regarding the EMEA region, so mainly Europe, you were saying that things were coming back in most of the markets in Europe, with the exception of, for the moment, Spain and the UK. Can you elaborate a little bit and tell us a little bit how you have seen the impact and where we are now, starting this month of July?
Sure. Thanks. Yeah, so as we all know, COVID-19 has a huge impact on commercial real estate and flexible workspace as part of that. We saw dips in demand of upwards of 60% as things kind of got into their worst during early lockdown stage. But quite quickly, the market started to rebound. And we've been watching over the last really 3 months, this gradual return to normal from a demand perspective, at least across EMEA. Where we are today, as you say, most of the markets actually are performing particularly well. The last sort of month, places like Germany, France, many of the wider EMEA markets are now seeing demand return to sort of even levels above their pre-COVID, which is incredibly impressive. The last couple of weeks, there has been a slight pullback. I think that's just some hesitance coming into the market as we've started to see wider, globally, some return to lockdown, places like Melbourne, sounds like Singapore's going into the same. So there's been a little bit, I think, more hesitance, but also there's a lot more data coming out now. So companies are taking a little bit more time and being slightly more kind of strategic in what they're doing.
So you mean that seeing that Melbourne is locking down again, that we have some second small wave in some Asian countries, and the situation of the US also impacts the psychology of people and tenants in Europe that you see?
Yeah,
at the
I mean,
moment? Yeah.
exactly that. I mean, most of us now are out of lockdown. We can go into the office in the UK, the same in France, in most parts of Germany, etc., in where you are in Belgium. But I think mentally people are still slightly concerned, and that the action and what's happening in parts of Asia is playing on our psyche, and therefore I think that is causing some slight hesitancy.
Just to add to that though, so we held a briefing call in Asia Pacific with around 70 operators across the region yesterday, and they correlated with what we're seeing from our own data, is that demand for flex space in Asia is up year on year, that we're seeing more demand from a bigger variety of clients than we've ever seen before, which is remarkable. However, it's not translating into deals yet. So clients, just James, who is a researcher and psychologist, seemingly it would appear, is looking at how clients are driving. They're really interested in flex space. They want to see their options, but they're not quite committing yet because they want to see how lockdown pans out over the next few months and weeks, I think.
Are those people new in considering the flex option, or they were already considering it? It's more like it slows the process still because of the uncertainty around the situation for the crisis. Or we can say, okay, those are new people, never had in mind that flex could become a solution, coworking could become a solution for them, and just it's been a few weeks of hesitation so far only, and we could expect that they convert later.
I think the simple answer is both. There was obviously a pause for people that were already looking for space, just because I think they, during early lockdown periods, quite often they weren't able to go and see those offices. So naturally there was a pause while operators and providers of space kind of got back into virtual viewings and provided that technology to allow that process to happen. That being said, John spent a lot of time talking to our large corporate customers and potential corporate customers, and I think a lot of those individuals and companies, this is still fairly new, and they're still trying to work out how this can play across their wider workspace strategy.
Look, I mean, this isn't as big a data set as our flex data, but I've surveyed and quantified 60 conversations with heads of commercial real estate from some of the world's biggest companies, and they're all supporters and advocates of flex, and they recognize the potential of flex within their portfolios of real estate. And I would say 75% or more of them are now saying they will be using more flex going forward, indisputably. It has to play a bigger role in their corporate portfolios, which is great for our sector, right?
How do you see them embracing the flex option? Is it partnering up with existing operators? We see also more and more of those real estate property owner creating their own service. Are they as for franchise, or where do you see the trends going?
It's a really interesting question, actually. Sorry, James, to jump in on this one, but I've really enjoyed getting their answers on this. I think they're waiting for the market to supply the answer. I would say a lot of these commercial real estate people have done business pretty much in the same way for a long period of time. They now know they need to find a more agile way of doing business, and they need to find more solutions. I don't think they know what those answers are yet, and they want the sector to come to them with the solution. So I think it's a great opportunity for our sector, but we're going to have to move fast to stay ahead of the curve. They do recognize that conventional landlords aren't providing what they want now, and they will challenge them to do so, and they'll challenge the rest of the conventional property market. They like the flex workspace product, and they want to see more of it. But to James's point on the conversation we had before the call started, they want to look in regional, or what we might call secondary locations, in all countries and all cities, to give more options to their staff. And if they're going to find the right space, then we as a sector have to work harder to provide it, I think. James?
Yeah, I think one thing that we can't ignore is most of these larger companies, despite the fact they're looking for agility and flexibility, they have inbuilt requirements. They will have promises and commitments that they've made to their staff around the types of workspace that they offer. The traditional...
You speak about the tenants.
The employees, the individuals, yeah. I mean, the traditional flexible office and co-working occupier or tenant tends to be, or has been in the past, an SME or a freelancer or an individual, and they are a lot more flexible in what they're willing to accept or can accept from the space. I think what we will see and what we're already starting to see is the demand from those larger companies is going to be slightly different. They have slightly different standards. And to John's point around the secondary cities, most of the supply, and this is a broad brush statement, but most of the supply in those secondary cities tends to be slightly lower quality than what you would find in the central markets and major capitals. And therefore that, I think we need to look at that as an industry and look at how we can raise that standard.
Exactly. In the discussion we had to prepare this podcast, we mentioned, for instance, this article in The Economist telling about the boom in the pricing of the real estate the last decades. But also this article was mentioning that overall there were underinvestment in the real estate market, which was also explaining why the prices boom in all those areas in Europe, and not only in the UK or in France or Germany, but overall everywhere. And now we see that indeed, that was my question. We see that the demand is going to boom. We know that there is already a number of co-working champions, for instance, but most of them are operating in downtown cities, in big locations. In the city in London, we see Manchester growing. Berlin, there was a lot of spaces. We see more in Stuttgart, in Frankfurt, or Vienna. But aside of that, it's still very, very limited. And as you said, the scarcity of proper investment in quality buildings seems to be maybe an element which could slow the process in terms of growing the offering and matching the demand that we see growing. What is your take on that phenomenon? Do you believe that it could really be a kind of bottleneck for this growth, or there are all other elements that we have to take into consideration?
Well, there's several different ways of answering this, but one really telling anecdote I've heard is two operators who I know very well who run pan-European operations have said that they've never seen so much interest in landlords coming to them to try and partner with them on space. So that's emblematic of what is happening. But to give you a wider answer, I think you're right. Real estate was underinvested in. We had record low vacancy rates. So, the market competition was fierce, but it was fierce for flex operators to take space, and it was fierce for customers trying to find space. So that was driving the market dynamic. Now we're going to have a very different situation whereby in very expensive central locations, landlords and operators are going to have to compete incredibly hard to bring customers into those spaces and to provide spaces that are right for them.
Yeah.
And for the commercial real estate class, I mean, it's been seen as a hedge, an asset class for 30 years now. We were saying every pension fund has topped up massively on commercial assets, right? And that serves the investor and the landlord. This sector, to survive, now needs to pivot and look back at the customer, the end user, the tenant, and say, what are we going to do to keep this customer? And to think more like the hotels market and aggressively fight for this customer and keep them for the long term. Otherwise, they'll just homework, or they'll go to another option, or they'll walk away.
You had an interesting sentence on that. You said that office market had not had enough competition in the last years. And then at the end, that's why also we are not happy with our traditional offices, because it's to turn towards the customer, the end user, the human being we are at the end. And you see that turn happening now, and that competition will come also because of scarcity for the moment of demand for traditional office, I guess.
100%. It's been an asset management sector, right? And that's the way that it's been treated, and the way that all of commercial property is geared up to serving an asset class. And now this will be about service provision, like hotels. But for those of us working within Flexible Workspace, this is no shock at all. This is what we've been doing since the inception of the industry. But for property, this is a complete sea change for the way that they operate and the way that they have to function. They have to provide a service. We heard from a friend who's an analyst within the city market that a company like Great Paul in the States or British Land, big landlords in the UK, are finally hiring customer services staff now. They have to stay ahead. They have to bring people in to look after their clients. They recognize the challenge this market will pose to them. And that will be a big departure. But I think for good flexible workspace operators, this is all opportunity, because we're experts in service provision. We're expert in brand, in lead generation. and this has got us where we've got to. What we now need to figure out better, I think, is how to work with landlords and convince them of our offer. And the conversation with landlords in secondary cities and regions, that will be a difficult conversation because they may not necessarily see the value in that.
Yes, and they are not necessarily the same kind of animal than you have in London or in Paris. They are sometimes family companies or smaller ones, and indeed, as we mentioned, the quality of the building is not necessarily at the standard that you would have experienced. I don't know, as Barclays in the cities, and you go all of a sudden in I don't know, Nottingham, and you have to deal with the old-fashioned building. So that will create some friction, likely, but also a lot of learning, I guess.
But this is already happening. I mean, we had an operator call on Wednesday, and a brilliant operator, office space in town, was saying that they're two Northampton centres, and Northampton is a very small city, a town in the UK. But even now, those centres are full. And they've been full for the last 3 weeks. Their London centre has 5 people in it. You know, so they're big business. Their central London location, which they pay a fortune for, no one's there. Northampton, you know, almost an afterthought, is booming. So that's going to be a challenge.
And we've seen that from the demand figures recently. These kind of secondary cities, or the satellite towns around the major financial cities, have weathered the storm far better than the big markets themselves. So we did some research looking at the smaller kind of commuting towns, as we would call them, around the big cities in both Germany and the UK, and we found that in general, not only had those markets recovered a lot quicker from a demand perspective, but equally they actually didn't see, you know, the negative dips that the central markets did during the early stages of COVID. So they look, you know, like the surefire bet for the future, and I think customers are already looking and starting to kind of, I guess, approach those markets to understand what the offering is. Co-working and flexible workspace ultimately has been, you know, a fantastic boom for those markets because they've been able to invest and bring up the standard of space and provide a unique service in those markets, which traditionally has been missing. I think we now need to see that on a broad scale, and I think it'll need to be a partnership ultimately between the landlords and the provider, because neither can do it, you know, and make sense financially on their own. It needs to be some sort of partnership.
I keep the question on bottleneck because James, also for the you mentioned in your research that the average size of deals grew by 22%. So it means that bigger teams are going in a flex workspace. But if everything we say is revealing right, and that's exactly the move we see happening, still the bottleneck will be huge. We will because to create and convert all those buildings and real estate properties into fancy auto-like kind of workspace, able to accommodate hundreds of people at once. It seems like, wow, we will have a waiting list for 10 years, maybe.
Yeah, so there is a lot of work to do, and you're right, that could cause a bottleneck. I think you also have to though look at the other side of things, which is if you take, you know, most companies out there that have traditional offices today, they have a lease, they have an existing requirement, and most of them are going to find it very difficult or costly to leave that lease early. So I think what we're seeing at the moment is companies, whether they're medium or large scale, look at their strategy, their overriding strategy, and as these lease events happen, they will then start to move, you know, and change their strategies. Some are doing it much quicker than that. Some are taking, I guess, the financial hit right now and saying, no, we need to do this, no matter what it costs. And therefore, those are the ones that I guess are the early movers, and those are the ones that we need to be catering for right now. But I think, you know, if we look at across the whole of real estate, it's not going to be a one, you know, big shift, because actually for some companies they're tied in for another 20 years still in certain locations. So I think, as I say, you know, we will see that slow move from some of those, but equally some right now are coming to us and coming to the market and saying, no, we need to move now, and we need the offering.
A last point, what do you think of, or do you see partnership or integration with other kind of service. We mentioned that, for instance, due to what is happening, we saw some railways companies considering to downside the offering because yes, their trains are empty and they could remain empty for quite a while. So it's expensive to operate and keep the maintenance and everything. And on the other hand, I just saw, I think it was also in the UK, I think it was Spaces or a space like that, were marketing themselves because they had, I think, 300 lots for bicycles. Meaning that indeed the positioning and the value proposition for them was, okay, you can come up to our space by bike, and not okay, you will have we are in the class A building with with super good air conditioned and the elevators takes you in 2 seconds to the 10th floor, and the kind of matrix we heard before. Do you see those kind of partnership or integration of proposals saying, okay, we are not only a space, we're also a space which is integrated with other kind of services and not other kind of values?
I think everything's up for grabs, or everything's to play for at the moment. What we are seeing from the real estate side of things is other real estate classes start to look towards the flexible working world and say, what can we do? How can we partner? How can we get involved? So we're talking to a number of landlords of sort of shopping centres and malls who are looking at, the expected footfall on the high street is expected to fall, wherever you are in the world. And I think a lot of landlords are accepting or starting to accept that, and therefore they're looking at how can they repurpose their space. Equally, there was an interesting trend or term, work hospitality, and it was around the increase of interest from hotels. Equally, these guys have got huge footprints. A lot of the big chains have. And they've got space, a lot of it underutilized. So equally, I think those sort of companies are going to be looking at what sort of joint offering can they bring, and how can that provide a new type of service to the occupier. John?
But I think that there's even more options out there. Like there's an awful term going around now, which is resi-mercial, so residential and commercial, where finally, if you're going to work near a home, what's a good compromise? I don't like working, personally, I don't like working in my house because of all the noise and disruption. My son's just come home from a play date and has already been shouting up and down the stairs while I'm on this call. But I would like to work around the corner. What's a good option for me, right? Or what's a good option to have a meeting with James if he lives half an hour away? And there's so many different options, but asset classes have just stayed in their lane. This is retail, this is offices, mixed use. Yeah. Real estate has been a really difficult nut to crack, problem to solve. So I think there's so many more options now, and property owners of all kinds are going to have to be a lot more fluid and understand the types of services that can be provided in their space. Hoteliers have spent the last 5 years trying to work out co-working and can they provide more workspace or provide options, because it's nice to work in hotels. The Wi-Fi is good, the food's great, the coffee's better, right? That's a good option. Retailers now are thinking, actually, could 10% of our space be co-working? And then we'll get those people buying from our shops too. And that would be a good way of bringing our proposition alive. And in the US, it's been quite normal to have co-working in malls for a while now. But again, that service could be better. So it's just having more fluidity between these different services. And I think for asset managers in property to stop thinking in their lane and start thinking, well, look, what does a customer want? How do they use our space? There's much more freedom of expression there, I think.
Awesome. We would speak about everything for hours. So, but to end it, we are partners. Instant is a partner of the Coworking Europe conference. You have been so for quite a while. For people listening to us, what if they reach out to you? What for can they come? Is there something you can tell them, or is it specific things you are proposing now that I was having a look at?
As John mentioned, we sit on a lot of data, and over the last couple of years, we've been increasingly being asked by landlords, by providers of space, by investors to I guess, look at the markets and help them explore opportunities, or understand risks. And I think, if you're out there and you're looking at a particular market, or you're looking at your current space and you're trying to understand what can I expect from it, what sort of pricing can I achieve, what sort of demand levels, what sort of occupancy, that's all sort of information that we sit on. And we produce a mixture of reports for companies, as I say, across the commercial real estate industry. We produce our marketing reports or market reports, about one a month on our website, and those are free to download. And then alongside that, we do bespoke work. If you have a question, obviously you can reach out and we will see what we can do.
Perfect. And we will have you in Vienna for the Coworking Europe conference.
Looking forward to it.
Fresh new data, the latest trends that you are uniquely positioned to get and craft in a great messages. Thank you so much, James and John. And
thank you very much.
All the best for the coming weeks.
Well, I hope to see you in person very soon.
Definitely. Bye.
Right.